I am Lysandra Everett, and welcome to the Daily Revision Morning Show. And today is Tax Tuesday. Every Tuesday, I talk about a tax topic specifically. So today is going to be the tax benefits of owning your own business. So I'm going to give everybody a minute to get on. I'm also going to share this out. Fabulous lighting in my office. I've got this terrible glare right now, and it's driving me absolutely bananas because I can see it, and yeah, it just drives me bananas. But it is what it is. That is the cost of wearing glasses, which I hope to rectify within the next couple of years. Because I want to actually get laser eye surgery done, but I got to be in one spot long enough to do all of the follow-up stuff. So yeah, that's what makes it a little bit interesting. Good morning, Lisa. Girl, I saw the picture of your baby. Oh my gosh, yes, they do grow so fast. Oh my goodness. All right, let me share this out in one or two places really quick. So we are going to, and as usual, if this is your first time on my show, please let me know who you are, where you're from, so I can shout you out and say thank you for joining me. And share this out because this is, especially if you are a business owner who builds a team in their business, this is going to be something crucial for you to share. Because see, I'm going to talk about this because, we had the debate last night and everybody is all up in arms about Donald Trump and his taxes. Okay. So we're going to talk about taxes for the regular folk. All right. So let me share this out and then we'll get going. One thing I don't like about Facebook is when you're trying to share to a group, you can only do one group at a time unless I'm doing something completely wrong, which is not exactly out of the realm of possibility as well. Thank you for sharing, Lisa. I appreciate that. And let me get to okay. So let's go. So again, I am normally here Monday through Friday, 9 o'clock-ish, and I'm usually here for about 15 or 20 minutes. Although I don't know, today might actually go a little bit long. But if you have any questions about anything, make sure to inbox me because Friday is Q&A Fridays, and the questions I get during the week, I try to catch those on Friday. Okay. Q&A Fridays are a lot of fun because I get some crazy questions from you guys. Okay. So let's talk about business, okay? Let's talk about the tax benefits of owning your own business, okay? Because this is something that we are completely missing the boat on. We are missing the boat on owning our own businesses as it creates wealth for us and our communities. And we're also missing the boat when it comes to tax benefits. Because here's the thing, one of the main things I hear the poor people, middle class talking about is rich people and taxes. Okay. So let me first give you the biggest difference. Business owners pay taxes after they pay expenses, where employees, if you work a job, you pay your taxes before you get your money. Okay, that's the difference. And you say, okay, wait a minute. What do you mean they get to pay taxes after they pay their expenses? After a company pays their bills, then they say, this is what we can afford to pay you, Mr. Government, where an employee, 30% of your check normally goes to the government, goes to your taxes before you even see it. All right. So as it comes to really keeping wealth in our neighborhoods and also building wealth for our families and also keeping more of our money, that's where this thing right here comes in. This is the Schedule C. Now, a lot of home business owners have seen the Schedule C and they say, oh yeah, that's great, but really not understanding what this is. Now, the Schedule C is for a sole proprietorship, which is if you are if you have a work from home, if you work from home, a lot of times you are a sole proprietor. And what that means is there's no separation from you and the business. So if you're a sole proprietor and you die, your business dies, okay? Whereas with the corporation, if you die, the business keeps going, okay? So you're not separated from the business. But the reason this is so valuable to us, this Schedule C, is that there is so many tax deductions here. Now, if you own a business, understand this. And this is where, and I've talked about this before, this is where I believe home business owners really get the short end of the stick, because a lot of times they tell you how to get in business, but don't tell you how to run the business. Okay. But this is what you keep in mind. In order for you to claim your business deductions, you have to be in profit 3 out of 5 years. Okay. Because otherwise then the IRS says that you're a hobby and you can only deduct up to the income that you make. So if you only make, if you operate in a loss, then you can only take the loss up to the income that you bring in. So I hope that makes sense to you. I know it can be tax. Listen, the more I get into taxes, I understand why people say, oh, just, let somebody else do it. I totally get that. But listen, this is where we need to get educated, because everybody's ticked off saying, oh, okay, rich people don't pay their share of taxes. Well, it's because they have people that know tax law, and it's time for us to get smart too. And because there are advantages that we can take advantage of by owning our own businesses that we are not doing. All right. So that's why I want to show you this Schedule C, because it has things like a home office deduction. So a home office, for instance, is a dedicated workspace. There's nothing else going on there. It is a dedicated workspace in your home that is used strictly for your business. So if you have a bedroom that you have converted into an office, that percentage of that bedroom to your home is what you can deduct from your taxes on your expenses here. Yay for the Schedule C. The mileage that you drive to conduct your business related miles, are deductible. Okay. If your company, and this is when you're a separate entity, just so you understand, but even if you lease a car, the percentage that you use that car for business, you can write off these things. And I will tell you now to consult with your local tax preparer, your tax advisor, have a CPA, tax attorney. You need all these people, right? Because each one of these people has separate interests when it comes to your whole business, all right? But every business that I know of starts out right here as a sole proprietorship. Apple started in a garage. Google started in a garage. Facebook started in a dorm room. You are going to start at your kitchen table. Okay? So you have this Schedule C. Advertising. If you've got business cards that you buy, flyers that you print, if you place an ad in if you have if you live in a neighborhood that has an HOA and they have one of those quarterly you know what I'm talking about. It comes out and say what's going on in your neighborhood. If you place an ad there, that is a deductible business expense. Okay, so you've got meals and entertainment. Okay, that's 50%, y'all. I don't care how you slice it. And there's some other restrictions, but for the most part, it's 50%. So don't be going out trying to take everybody to Ruth's Chris, think you're going to write off 100%. It don't work that way. But you've got to have a business reason. And listen, you've got to keep the records. Okay. I talked about this previously. You got to keep the records, because just having a line on your credit card statement does not satisfy the IRS for proof that this was a business event. You've got to have the date, the place, who was there, and the reason for the event. Okay. Now, why am I saying this? Because we have so many talents. Okay. Hey, Matt, how are you? Matt owns Anytime Fitness. Okay. So there's your fitness dude right there. Okay. Hey team KC10, how are you? So we've got all of these talents, okay? And we're so concerned about taxes and money but we're not taking advantage of what we already have in order to create our own economy. I am so about creating our own economy. Why? Because everybody's spending all this time being worried about this presidential election. Okay, that one, we're not even paying attention to our local officials, first and foremost. But secondly, we're not paying attention to our own economy. We can be keeping more of our money if we learn the rules. That's how you win at any game. If you learn the rules and play it better than anybody else. Everybody's pissed off at Donald Trump because he's not showing his tax returns. Well, you know what? Because his people play the tax game better than anybody else. Don't be mad. Get educated. Okay? This is what I'm saying. You know, you sit there and, you know, and believe me, I didn't even watch the debates last night. All I did was come to my timeline, and all I saw was talking about Donald Trump and his taxes and Hillary and her lies. That's all. But let me tell you something. I don't care who gets in the White House. If you are not taking care of your own economy, it don't matter what they do. It does not matter. I'm getting straight country on y'all today because this is something I'm heated, okay? I'm heated about this because we are not getting educated enough to take care of ourselves. I don't care if you bake cookies. You might be a fitness guru. There are so many ways out here to make money, but we got to learn how to keep said money. This is why people with home businesses get audited so much, because there's so many tax deductions here. What do tax deductions do? They reduce the amount of your taxable income. So that means you can make $40,000. Now you can pay taxes on that $40,000, or you can have some deductions right here that can help you take that $40,000 down to 30, down to 20. And let me tell you something. Because see, we keep talking about something else. We keep talking about immigrants. Let me tell you something. Let me tell you about a man I met last week. I met a man who's an immigrant, came from Guatemala. He has, count them, 3 businesses that are making 300 grand a year. 3 of them. But you know what his tax bill was? $6,000. Why? Because he got here and he played the tax game and he played it to win. So you think about that for a second. 3 businesses bringing in $300,000. His tax liability, $6 grand. So this is what I'm saying. Instead of getting mad, get smart. Get smart. Because you think about it. Here's another small example. Your cell phone bill. You can pay $100 for your cell phone. As a sole proprietor with your cell phone in your name, you can deduct, I want to say the max is 50%. But if you incorporate, if your phone is in your business's name, you get to write off more than 50%. Okay? So this is where we start right here. This is kitchen table, but this is not where we stay. As your business grows, and this is where I believe, again, where the home business industry fails in educating our people, okay? Because you're going to start on your kitchen table. You're going to start here. Now, as your business grows and you generate more income, then your business entity is probably going to have to change in order for you to be able to keep more money. And you also need to set aside, I would say, roughly 30% of your income for taxes. Because as your income grows, you're going to have to pay taxes. That's not, that's going to happen. You're going to have to pay some taxes. But the question is, will you be prepared to pay said taxes? That's why you need to set aside 30% of your income in order to pay taxes. Now, if you set aside 30% and you have enough deductions to where you don't have to pay all that, that's great. You pay what you owe and you have some more money to reinvest into your business. But here's the thing, we don't know. We are not educated on taxes. We run from taxes like the plague. We need to run towards the thing we are afraid of. Once you get educated, and it even got to be you. This is why you have teams of people. This is why you specialize in things. This is why you don't have to know everything. You really think Donald Trump knows what his tax deductions are? Really? No. He got people that know what his tax deduction should be. So this is what I'm saying. Get this schedule. As a matter of fact, after I get done with this, I'm going to, it'll be probably a little bit later because it's going to take me a second. I just had this fabulous idea. I'm going to, but wait, what am I talking about? You can just go Google this. Go Google the Schedule C. You need to know what's on here for your mileage. If you have your car, if you're not leasing a car, you're using your car. You get paid for your business miles. And by the way, if you are an employee and you have a second job, the miles between your first job and your second job, those miles are tax deductible. But here's the big thing that I really should have said in the beginning. Besides the business part, you have this stuff, okay? If you have, this is separate. And what happens is this. Let me explain what happens to the income. So with this income, if you're showing let's say if you're showing a loss, where it's a gain or a loss, whether you're a profit or loss, it goes to your 1040, okay? In your income. So this is why people are so excited about home businesses, because they know in the first year or two, 9 times out of 10, you're going to operate at a loss. When you operate at a loss, this also offsets your tax liability from your W-2 income. However, you know, the IRS expects you to start a business at a loss, but they don't expect you to stay at a loss. So just getting into a home business for tax purposes isn't the best idea. You really have to have a willingness to work at this and turn this into something, okay? Whatever this is, all right? So because if you, when you operate in profit, that also comes to your 1040 as your income, okay? I had this lady, she had a home business and she made $11,000 in her home business. So she wound up owing taxes and she about stroked out. Like, I don't understand. But it's because she did not realize that when you bring in that extra income, as your income grows, that you're going to have to pay some taxes. Nobody told her to be prepared to pay taxes, okay? But you're going to pay fewer taxes because you get so many of your deductions here. So go to Google the Schedule C and see what's on here, right? You know, I have some businesses that keep an inventory. Keeping your inventory is straight is so key for you. I couldn't do it. That's why I stopped keeping inventory. I couldn't keep the inventory straight. That's why I stopped. But some businesses, you do have an inventory. And so you've got to know what your inventory is when you're starting, at, you know, what you sell, your cost of goods sold, because all of this reduces your tax liability. Okay. And if you don't know, you wind up paying taxes that you don't necessarily have to. Okay. So, what else? Okay. So, I was talking about the job thing. Okay, so if you are a W-2 employee and you have a job, you have a second job, you know, like when I was first starting out, especially when I was in college, I had 3 jobs, okay? If you are itemizing, and this is what is key, the itemizing part, because we all get a standard deduction. And if your itemized deductions don't equal or are not more than your standard, then you take the standard deduction. So this is why you need to own some property, okay? Own some property because there's tax benefit to owning property. You get to write off your the interest you pay on your mortgage. You get to, if you've got personal property taxes, I don't know about everywhere else, but I know Virginia has personal property taxes. You get to write those things off on your tax return. Okay? But if you're driving from job A to job B, those miles are tax deductible. Okay? If you have employee expenses, so if you, let's say you have to buy your own work boots, okay? Now, there are specific limitations to that. It has to be meet a specific limit, and I want to say it's 2% of your adjusted gross income. So if you, and this is why you have, now it's not regular clothes, uniform type clothes. So if you have your, okay, so here you go. Here's another tip for you. So if you have your own business, if you have, hey Leslie, okay, so Leslie's LLC, okay? If she has a monogram shirt that says Leslie's LLC, that shirt, that expense is deductible from her business. So, and it can't be like a regular shirt. Like, see, you see at Target, they have the red shirt and the khakis. Okay. Red shirt and khakis can be worn anywhere. But if they had to purchase their own Target shirt with their own Target logo, then that's an expense that you can deduct if you're itemizing. So you see, the itemizing part is really key. All right. And getting these deductions, these tax benefits, because it doesn't matter how much money you make. It really matters how much you keep. And if we can really educate ourselves on how to reduce our taxable income, then we will create more wealth for ourselves, our communities, and our families. And we can also get to the point that we can take advantage of some of these sweet rules that the Donald Trumps in the world are taking advantage of. Okay? So let's not get mad. Let's get smart. But we got to be willing to start here, though. We got to be willing to start at the kitchen table. A lot of us are not willing to start at the kitchen table. We just want to blink our eyes like Genie and then boom, have this big corporation. That's not how this works. That is really, what's that commercial? That's not how any of this works. Because like I gave you in the beginning, Facebook started in a dorm room. Google started in a garage. Apple started in a garage. This is garage. Start in the garage. Be willing to do that for you and your family. And then you can start to build generational wealth. But it starts with taking advantage of these types of tax benefits. Because see, then what happens is, let me give you the growth cycle, if you will. Okay, so we start at the kitchen table with the Schedule C, right? Then we grow into another business entity. We grow our businesses, we make more money. Well, we start to put different types of things in our company's names, like phones and houses and cars. Now, you've really got to know what you're doing. You've got to have a corporate attorney and tax attorney on your side, on your staff, to help you with these things so you can meet all of the qualifications, because there are rules. The IRS has got lots and lots of rules, as y'all know. Okay, so then as your company grows, then like I said, you've got cars and houses that you are able to expense because they're owned by your company, not by you personally. That's how this is done. But the problem is we don't get from the kitchen table. So this is how we have to think. We have to think generational wealth. We have to think legacies that we are leaving for our children, for them to be able to take advantage of these things beyond what we are able to. But it all starts right here, okay? It all starts right here with the Schedule C, with the sole proprietorship, with you at your kitchen table. Like I said, I don't care if you baking cookies, baking cakes. I got a girlfriend that lives right down the road from me in Fredericksburg. She bakes cakes. Schedule C. Start at the Schedule C, but that's not where you stay. And you have to be in the mindset of, this is where I'm going to start. and I'm going to start taking advantage of this, and then be prepared to move forward. But you've got to have something. You know, I drop ship. Okay, that's my home business. I'm a sole proprietorship right now, but as my income grows, my business entity will change. What do you have? We talking about, I mean, you got people that cook, organize, clean houses, all these things. We talk about so much about how there's no money out here. Trust and believe there is money out here if you're willing to work and go find it. If you're willing to work and go find it. I'll give you another example. My husband fired our lawn guy, right? Fired our lawn guy. Didn't like him very much. And my grass needed to be cut. And my husband was like, look, I ain't got time to cut the grass. Okay, so I got to fix this, right? So what do? My neighbor across the street, I went right over to his lawn guy and said, hey, I need my grass cut. Can you do it today? He said, yeah, $40, I got you. That was an easy extra $40 that he didn't even plan for. He didn't tell me he had to schedule something. He's like, yeah, $40, I got it done. And he's better than my other lawn guy. I wish I had known he was about him, because he would have been cutting my grass to begin with. So, but the point is you got to be willing to hustle. You got to be willing to hustle up and find the ways to make money. And then when you find the ways to make money, make sure this is your Bible right here, your Schedule C, so that you know what you can write off. Whether if you choose to take mileage from your car, which is usually the easiest thing, okay, in order for you to accurately annotate your mileage, you need to know what your mileage is at the beginning of the year, and then you need to write down your business miles, whatever it is. I don't care if it's 1 mile. What was last year's write-off? 53 cents a mile, I think, something like that. So when you think about it, if driving a mile earns you 50 cents, a lot of, those 50 cents start to add up. Okay. So in order for you to do that, you need to write down at the beginning of the year. You need to write your business miles, whether it's 5 miles, 20 miles, whatever. Write those miles down, and then your ending mileage. Keep a notebook in your car. Take the time out to write it down, because if you are not able to substantiate these things with the IRS, they're going to tell you, well, you cannot take this deduction, and that's just it, because you have no proof. But if you have a log of your miles, and people talk about, well, what kind of software? Keep it simple. Write it down. Like, seriously. Everybody wants to get all high tech, and, I don't want to have to think about it. Yes, you need to think about it. You need to be thinking business at all times. Let me give you an example of what I mean about thinking business at all times. I occasionally go to the UPS store. I do not go to the UPS store unless I am on my way to pick my son up from school, because the UPS store is on the way. So I'm getting paid for my miles at the UPS store. I'm not going there for free. So you need to be thinking about that when you are conducting your business activities. I conduct my business activities in conjunction with other stuff that I'm doing, because I'm making some money one way or the other. So I have gone on long enough. I am so sorry, y'all. But as you can see, this is something that is really very important to me, that I'm very passionate about, because I want us to stop. I want us to stop being broke. I want us to stop thinking broke and start thinking wealth. Start thinking, how can we build generational wealth? How can we bring wealth back into our communities? How can we bring wealth back into our homes? How can we do it? When you start asking how, your subconscious is going to give you an answer. So stop dwelling on the problem, and let's start dwelling on the solutions. One of the things, the solution is to get smart, get educated about how you can keep more of your money. Owning a home business is one way to do that. And then here's the other tip, and I promise y'all I'm a hush. I promise I'm a hush. Go visit some financial planners. They're not all crooks, I promise you. And, and they're not all going to charge you. Some of them will just sit down with you and say, okay, here are things you can do in order to create more money for your families. Go visit financial planners. They might talk about some stuff that you don't understand. That's okay. Google knows everything. We got books. There's no reason for us to walk around here uneducated. We have too many resources available for us to get smart. And we need to start using them. So, okay, I have been on my soapbox way too long. But I thank you all really for being with me and listening to me. And I really hope that this helps you in conducting your own lives. I really do. So, like I said, if you've got specific tax questions, make sure to shoot me an inbox. I will tackle them on Q&A Friday. And if I need to do a Tax Tuesday on that, I will most certainly do that. Absolutely. I'm actually scheduling webinars right now. I've had requests for me to come and speak to their various companies about running their businesses. So I did not expect that to happen, but hey, it is what it is. And so I'm going to roll with it. Definitely gonna roll with it. Okay, so listen, thanks so much for joining me. Remember to subscribe so you don't miss any of my notifications. I'm here Monday through Friday, 9 o'clock ish. Tuesdays is always Tax Tuesday, and Fridays is Q&A Fridays. All right, so that's it for me. Thanks so much for joining me, and I'll see you next time. Hey Rhonda, how are you, babe? And Shantae and Monique, I'm not sure if I spoke to you guys, but good morning. Love you guys. I'll see you next time. Bye.